The US dollar has long been the cornerstone of the global financial system, serving as the primary reserve currency and the default medium of exchange for international trade. From oil to gold to high-tech components, most cross-border transactions are priced and settled in dollars. This dominance provides the United States with unique advantages: the ability to run large trade deficits, issue debt at low interest rates, and exert economic influence through sanctions and global financial rules. However, in recent years, a coalition of emerging economies known as BRICS, Brazil, Russia, India, China, and South Africa, has been actively exploring ways to reduce the world's dependence on the greenback. The question arises, can BRICS truly dethrone the dollar from its dominant position? The answer is multifaceted, involving economic, political, and strategic considerations. To understand the challenge, it's essential to examine why the dollar holds such a central role. The dollar isn't merely a currency. It represents trust in US institutions, legal systems, and markets. Central banks worldwide hold trillions in dollars because they know they can easily trade them, invest in US Treasury securities, and rely on the currency's relative stability. It's the global financial equivalent of that one friend everyone trusts to lend money because you know they'll pay you back. Replacing it isn't just about issuing another currency, it's about creating the same level of trust, liquidity, and stability, something that takes decades to build, if not longer. BRICS nations, however, have compelling reasons to challenge the dollar's dominance. For countries like China and Russia, reducing reliance on the dollar is partly about avoiding the leverage the US gains from sanctions. For instance, when the United States imposed sanctions on Russia following geopolitical conflicts, Russian entities faced severe restrictions because their international transactions were largely dollar-based. Similarly, China, deeply integrated into global trade, but often at odds with US policy, has been exploring alternatives to dollar settlements to insulate its economy from potential financial pressure. Even Brazil, India, and South Africa see strategic value in promoting trade in their own currencies, or in alternative arrangements that reduce transaction costs and dependence on Washington's financial infrastructure. One of the most tangible steps BRICS countries have taken is increasing the use of their own currencies in bilateral trade. China, in particular, has been promoting the renminbi, yuan, in international markets. By establishing swap lines, encouraging yuan-denominated contracts, and supporting the use of the currency in commodities trading, Beijing is gradually increasing the yuan's footprint. Russia, on the other hand, has been working with China and other partners to bypass the dollar in energy transactions, particularly in oil and gas. These moves are strategic, but face significant hurdles. Liquidity is one of them. While there is growing trade in yuan or ruble-denominated contracts, the global market for these currencies is far smaller than for dollars, meaning it's harder to find counterparties and execute large-scale transactions without affecting exchange rates. Infrastructure presents another challenge. The global financial system, from SWIFT payments to international clearinghouses, is largely built around the dollar. Any attempt to shift significant volumes of trade to alternative currencies requires creating new networks that are trusted, efficient, and interoperable. China has made strides here with initiatives like the Cross-Border Interbank Payment System, CIPS, which allows banks to settle yuan-denominated transactions outside of the SWIFT system. Russia has developed its own financial messaging system for similar reasons. But building these systems is only part of the puzzle. Convincing banks, corporations, and governments to adopt them en masse is another. People tend to stick with what works, even if they complain about it, and the dollar works remarkably well. Economic size matters too. The US economy remains one of the largest and most liquid markets in the world. Treasury securities, often denominated in dollars, are widely regarded as the safest assets globally. Investors, from central banks to pension funds, rely on these securities for stability and predictability. For BRICS currencies to challenge this, they would need not only stable economies, but also deep liquid financial markets, where investors can park trillions of dollars without fear. China is making progress with its bond markets and capital account liberalization, but it still has a long way to go before its securities can rival US treasuries in terms of trust and liquidity. Political stability is equally critical. The dollar benefits from the perception that the United States has stable institutions, enforceable contracts, and predictable governance. While not perfect, these systems provide reassurance to investors and trading partners that their assets will be protected and contracts honored. For BRICS countries, political risks, whether from internal governance issues, geopolitical tensions, or policy unpredictability, can deter widespread adoption of their currencies. Trust takes time to cultivate, and markets are notoriously conservative when it comes to abandoning a known safe haven for an unproven alternative. That said, BRICS countries are not without advantages. Collectively, they represent a significant share of the global economy and population. Their combined markets, natural resources, and trade networks give them leverage, especially if they coordinate strategies effectively. For example, initiatives like the New Development Bank, NDB, which funds infrastructure projects among BRICS nations, provide financial independence from traditional Western-led institutions like the International Monetary Fund and World Bank. Additionally, geopolitical tensions, including US sanctions and trade wars, create incentives for other nations to seek alternatives, potentially creating space for BRICS currencies to gain traction. Another factor supporting BRICS' ambitions is the diversification trend in global finance. Countries like Turkey, Iran, and even some European nations have increasingly explored trading in currencies other than the dollar to reduce exposure to US financial influence. Commodities like oil and gold have occasionally been priced in euros, yuan, or local currencies in bilateral deals, signaling that while the dollar remains dominant, cracks are appearing at the edges. However, these cracks are incremental rather than revolutionary. The global economy has network effects. Everyone uses the dollar because everyone else does, and breaking that cycle is extremely difficult. It's also important to consider technology and digital currencies. China has been pioneering the development of a central bank digital currency, CBDC, with its digital yuan. This innovation could facilitate international use of the yuan, streamline cross-border payments, and reduce reliance on US-dominated financial systems. If widely adopted, digital currencies could lower transaction costs and make BRICS currencies more competitive. However, the success of such a digital currency depends on trust, international acceptance, and interoperability with existing financial systems, all of which take time and negotiation. While BRICS' push for de-dollarization is strategic and ongoing, the US dollar's entrenched position is formidable. Its advantages are structural, not merely economic or political. The dollar's dominance is self-reinforcing. Widespread usage encourages liquidity. Liquidity encourages more usage, and stability encourages trust. Dislodging it requires not only strong alternatives, but also coordinated, sustained effort, and a willingness among other nations to adopt them, often in the face of uncertainty. That is no small feat, especially given the inertia of global finance. Geopolitics plays a critical role as well. The BRICS nations do not always act in perfect harmony. China and India, for example, have long-standing territorial disputes and strategic competition, which complicates any coordinated financial strategy. Brazil and South Africa have their own domestic priorities and political cycles that may conflict with broader BRICS initiatives. Russia's relationship with Western nations and its exposure to sanctions adds additional layers of complexity. Coordination is essential for challenging the dollar, but internal divergences can slow or dilute collective action. Despite these challenges, the BRICS push cannot be ignored. Incremental steps, such as increasing trade in local currencies, establishing alternative financial institutions, and promoting digital currencies, signal a clear intent to reduce reliance on the dollar. The symbolic and strategic impact of these efforts is significant. They demonstrate that major economies are willing to explore alternatives, challenge US dominance, and assert greater economic sovereignty. Even if the dollar remains dominant for decades, the narrative of its invulnerability is changing. In the end, the question isn't whether BRICS can immediately dethrone the dollar. It's whether they can gradually chip away at its dominance while creating credible alternatives for global trade and finance. Over the next few decades, we may see a more multipolar currency system emerge, where the dollar remains dominant but other currencies, particularly the yuan, play a larger role in international trade, reserves, and financial markets. The financial world may evolve from a single currency system to a more diversified landscape, with strategic implications for global power, economic influence, and geopolitical leverage. In the short term, BRICS is unlikely to challenge the US dollar's dominance, thanks to the dollar's unmatched trust, liquidity, size, and stability. But over the medium to long term, BRICS efforts, including digital currency innovation, coordinated trade policies, and strategic geopolitical moves, could slowly chip away at the greenback's global influence. The shift won't happen overnight. It requires credible alternatives, global confidence, and a coordinated approach across 5 very different economies. This isn't just about money. It's about power, influence, and the architecture of the global financial system. As BRICS currencies and alternative payment systems gain traction, the dollar's role may gradually evolve from unchallenged ruler to a key player in a more multipolar system. Imagine it like a global board game. The US still holds major pieces, but China, Russia, India, Brazil, and South Africa are quietly positioning their pawns, knights, and queens, aiming to balance the playing field. Over the next few decades, the world may witness a rebalancing of financial power, making global trade more competitive, strategic, and even a bit unpredictable. The era of unquestioned dollar supremacy is being tested, and BRICS is making sure the world notices while slowly claiming its own space.